Hello everyone, happy Sunday. This is Simon with AvaTrade, and I want to welcome everyone to our weekly webinar, and of course the special welcome to the new people. The title says it all pretty much, and for those of you that are not new to this, excuse me for repeating myself every time, but this is important that the new people feel comfortable and understand what this webinar is all about. And the idea is very simple: to create a structure for the upcoming week that includes going through instruments, through some fundamentals, to some technicals, and create a structure, create a plan, so we can be more organized in our trading in the upcoming week, which could potentially lead to better results and remove, as I always say, chaotic and impulsive trading that is not a very good thing to do. So this is me. A few things about myself. Simon Friedman, that's my name. I'm a senior account manager with AvaTrade. I started my trading career back in June of 2000. It's over 22 years now. For about 11 years, I was professionally trading as a proprietary trader in maybe 3 proprietary trading firms on Wall Street. And after that, I moved to a different way of trading and also help to grow traders, to mentor and educate traders. And currently, I'm working with AvaTrade as a senior account manager, trying to share my knowledge and help people succeed or become better traders. The agenda of the webinar is pretty much the same thing every week. We talk about indices, stocks, commodities, and Forex. And these are the channels that you can follow us. Somehow it's jumping the presentation. Sorry about that. You have Telegram, you have Twitter, and YouTube. As I always say, it's my favorite. We adding there on daily basis new material. There's a lot of tutorials there. There are webinars that being done daily. There are market reviews that being done by my colleagues. A great source of wisdom and education. And of course, before we move further, this is the risk warning. You can find the full statement or document at avatrade.com. And the idea is very simple, that what we do here is purely educational, and in simple words, you need to make your own decisions and take responsibility for that. Now, I start with this picture. I like to post pictures for those of you that are not new to the webinar. I try to kind of illustrate the mood on the markets, and I find them, this is all sources that are available. This one is from marketwatch.com, and it says right here, if you need one more reason why stocks will likely lose money in September, here it is. And I highlighted that: beware the Federal Reserve double tightening. And I want to start actually with this. And the idea, what does it mean double tightening? We know that the Feds are increasing the interest rate because the major war that they have to deal with is the high inflation. And as I mentioned to you last week, the 10-minute speech really spooked the markets because the language of Powell was more aggressive than usual. He just said as it is, that they'll just do whatever it takes, even if it's recession, that they need to bring the inflation down, and to 2%, the goal is. So that's one thing. And what's the double tightening, you would ask? And the thing is that we kind of forgot to mention, or forgot about it, that's the tightening, that they unload all the securities, all the securities they purchased starting from 2008, when it was a QE, quantitative easing, when they helped the market survive, they helped the firms to survive, and the economy in general, when they started to purchase different securities. So now it's the opposite process. They unloading it, and this month they have to unload more because they're behind on the amount they planned. So the analysts are expecting a more aggressive unloading this month, and together with the interest rate increase that we're expecting, I think on the 21st of September, that will put potentially more pressure to the market and more chances of a sell-off. And in general, if you speak about September, historically, every trader knows historically the September is not such positive month for equity markets. They usually sell in September. So knowing that and knowing that the Feds are taking more actions, and in this case, it's double tightening, we could be expecting continuation of the sell-off on the market. So as I usually talk about the big picture, let's just run through it quickly. The war is still there. I'm not going to go into it. It's very upsetting. We have natural gas total shutdown to Europe by Gazprom, by Russia. They claiming that technical issues, and they said that they're working on fixing it. But the language there is pretty much aggressive. And the G7 had a meeting, and they're trying to put the limitation on the price of the oil. And in response to that, Russia is cutting the gas. That's pretty much what we're seeing. So the gas shortage or the lack of gas, I don't know what the full extent of it, is causing some panic in European countries, especially Germany, France. Even though the capacity for the winter, they pretty much filled up. I think they're about 85, 90% full in their storage for the winter. But we'll see how that thing develops further. So we have the war, we have shortage of gas, we have prices of oil actually went down, and we have this week, we'll go through the economic calendar in a moment, but this week we have something to do with oil, and there's a big question: will OPEC cut the production of oil? And some analysts says that if they do, that might cause the price to go higher. I mean, that's logical, right? If supply is being lowered, the price might be higher. But then again, on demand side, we'll be seeing the sell-off in the market. Will the market stabilize? We don't really know. But Monday, there's an OPEC meeting, and we'll know what the outcome of it is. Now, we had NFP numbers, non-farm payroll, which most of you know, that's one of the most important announcements. And they reported that 315 jobs were added in August, down from a crazy robust number of 526 in July. So that's a good sign. And initially, actually, market reacted in a positive way. We will look in a moment at the chart what happened in the announcement NFPs. And we had unemployment actually rose to 3.7 from 3.5. So that's kind of also cooling down for Fed. But the market really sold after that. And one of the reasons that also on Monday is the Labor Day in the States, and US market is going to be closed. So it looks like traders panicked. They didn't want to hold through the long weekend the positions, and it looks like the sell-off happened, and we'll take a look on the charts in a moment. So these are the big things. We had NFPs, and the market reacted to it. Now let's take a look at the economic calendar for the upcoming week. And again, for those of you that are new, economic calendar is something that's important to know, whether you believe in fundamentals or not. But the fact that this is happening, at least you know that the markets, whatever corresponds to the announcement, will be reacted. And here I usually take the high impact events, as you could see in red. You can find there's a lot of sources, including on our app and web trader. You can find the upcoming events. So I take the high impact here, and let's just take a look and go through them really quick. We have GDP numbers from Switzerland on Monday. We have retail sales from Europe. We have interest rate decisions from Australia. We have service PMI from US. That's on Tuesday. On Wednesday, Series Day, we have GDP from Australia. We have monetary policy report from UK. We have GDP from Europe. We have Chair Powell speaking on Wednesday as well. And this is a big one from Canada, interest rate decision. GDP from Japan, that's the Wednesday. And Thursday is very, very important for Europe. We have monetary policy decision statement and the interest rate. Now, some analysts predict that the high chances of 0.75 increase as we had inflation rising again in Europe. So this is very important announcement. And as I mentioned to you last week, that Euro's been holding even on the strong dollar. It didn't really sell off heavily, unlike other currencies. We'll go through it in a moment. So that's all the announcements from Europe. We have also governor of Australian Bank speaking and the trade balance from Australia. We have CPI numbers, inflation numbers from China, which is also important, as China was on the radar for issues they're having there in the economy and COVID related as well. We have unemployment data from Canada. So these are the things, again, like I said, this is a high impact announcements. You can filter them, you can look whatever relates to your trading and the markets that you're working with. Okay, so let's move now to MT4. We'll go through the specific instruments that I had lined up for us, and we'll try to see what's happening. So, like I said, let's take a look at now. Again, I'm using S&P as a general indication, and that's what traders around the world are using to see what the global equity markets are doing. So, and of course, it reflects what US is doing as well. So the S&Ps, here comes the announcement. We moved a little bit higher, and then it was a heavy sell-off later on. We had, this is the 30-minute chart, so we've got 3 huge bars to the downside on S&Ps. Then we had consolidation. We tried to go lower, and then we came back, and the last 30 minutes and after the market closed, they tried to go a little bit higher. They couldn't. So the sell-off actually sustained here, and we are pretty much in red for Friday. Just to give you the numbers, on Friday, Dow Jones fell 1.1%, S&P's 1.1%, and Nasdaq was the weakest. As we mentioned, that the interest rate is affecting mostly the high-tech, expensive stocks, and that therefore Nasdaq is the weakest one. So Nasdaq dropped 1.3%, and it actually had 6 days in a row losing, and just the statistics, and it lost 11 out of 14 trading days. So the 6 consecutive, I just found this information. It's not because I'm smart, I just did the research. So it says that the last time Nasdaq was down 6 days in a row, it was August 5th, 2019. So as you could see, let me bring you the Nasdaq daily chart, and the Nasdaq is the weakest there. Now, let's take a look at indices actually. What could be waiting for us this week? And as you could see, this is the level here, 39.15 on S&Ps. I'm not going to go through all of them. We'll take S&P as a general thing. And it looks like we're holding here. Thursday, we tried to sell off. We had the green day. Friday, pretty much we tried the same level to the downside. We actually went up initially. So it looks like we tried to run up, but when the announcement came, we sold out. So we are really holding this 3,900 level, right? The low on Friday was 3,906. The low on Thursday was 3,903.25. So let's say 3,900 psychological level that we're holding, the even number, right? So that's what we should be looking for. And again, Monday, it's a Labor Day, so the stocks are closed, the exchanges are closed in the US, so it won't be trading. And I guess we will come back to trading on Tuesday, and we'll be watching this 39. If we see any closing below it, maybe it will start the sell-off. And if you can take a look at weekly chart, it's clear here. We're really sitting here on these levels. That's why you can understand when you zoom out, which is important to do when you try to analyze the big picture on the market. You see that we've been sitting in these levels on the weekly chart also for what, 6 weeks, trying to break through it before we moved higher. And then we had a hard time breaking through it again after the June sell-off, and now we came back to the same level of around 3,900 to test it. So if we do close below 3,900, there's a chance that we'll go and fish for the lower levels, and that could be around 37, 3,600 potentially, eventually. Let's put it that way. So that's the US indices. Nasdaq, pretty much the same picture. Now, European indices, as I mentioned, there's a shutdown, the gas pipeline, Nord Stream, and DAX reacted to it. Take a look at the 3 straight weeks to the downside. On the daily chart, also, it was a sell-off, but still, we are not approaching this serious level approximately at 12,500. We're still a little bit above it. So as you could see, we bounced from here, we bounced twice from this area over here, and it could be that we're going to be retesting these levels again around 12,500 on DAX. FTSE, it's been selling off heavily, even though we had the positive or green week overall. The French index as well, we are selling. A lot of it has to do with the natural gas as well. Nikkei, after this move, if you remember, I mentioned to you a couple of weeks ago that the economy in Japan is really getting stronger. And of course, with the global sell-off, things are happening, and Nikkei is selling as well. Now let's take a look at China. We always talk about it, and finally we broke through the downside, which we mentioned, right? If you remember that we've been trading in the channel between 13.5 and 14,000. The moment we broke 13.5 that we mentioned last week, we're gonna go and retest the 13. What was the level here? 13,260 to 70, and we closed below it, which is very bearish here. And considering fundamentals are not that great in China, we might see continuation or sliding lower here to retest maybe 13,000. And on that note, as you know, every time I speak about China, I speak about copper. And take a look, copper has been selling. I had an attempt to break 370 here after we spoke about it pretty much every week, and we didn't hold the support of 355, and we are on the way now. This level here around 340 is the serious level, and if we hold here, there's a chance to bounce, but we are making lower lows. And take a look, it's a straight 1, 2, 3, 4, 5, 6 days straight to the downside, and we are holding to this 340 level. So it's very interesting. If we hold, we might go and retest again the previous resistance. If not, we're on the way to retest 330. And if you take a look at the weekly chart, we're sitting right on the 200 moving average here on copper. Now, another one, of course, connected to it in currencies, you have Australian and New Zealand dollar that are called commodity currencies because they have a lot of resources that they sell, especially to China. So as you could see, of course, it's related a lot to the strong US dollar, but also with the weakness of China. Australian dollar has been selling off, and so is New Zealand dollar. So we established that indices are having very strong pressure, and in general, with the double tightening that I explained, with the increased interest rate and unloading the securities they build up for many years, that's going to create possible sell-off on the market. So that's as far as equity market. Now, another fact, I kind of look at it in Indian market, and I kind of ironically I've been giving a feedback on it that, okay, it's going up, it's going down, but apparently there's a serious fundamental about it, and I just researched about it. And there's a very rich gentleman whose name is Gautam Adani. He's the CEO of Adani Group, and he actually number 3 richest person now after Musk and Bezos. And so far this year, he made $60 billion at the same time as other 499 billionaires actually lost money. And just to give you the number again, this is the research. I didn't make it up. It also comes from MarketWatch. So Elon Musk lost about 18.9 billion this year, and Bezos lost about 39 billion this year. And this guy, they call him a high school dropout. He actually made a lot of money, and of course, the company is traded on Indian exchange. And maybe, again, I'm just speculating. Maybe all this more because they've been very successful. The main business is ports, and they invested also a lot in energy. So technically, so that's fundamentally. So now we understand maybe why this went vertical. And now, if you take a look on the daily chart, we couldn't break this previous level of resistance, and we consolidating here, possibly continuing with the global markets to the downside, or maybe retesting to the up. Again, for those of you that are looking to trade a Nifty 50, it could be interesting to look into it. Okay, so with that, we'll wrap up with indices. Let's move to some individual stocks. I'll start with Apple. Apple is the strongest stock on the board pretty much. And take a look, it's been really selling, and it's holding this level here around 155. Now, very important week for Apple. This year, they have an earlier event. They have a product launch event that it's taking place on the 7th of September, right? That's Wednesday. And of course, the main product is going to be the iPhone 14 and the new watches. There's some rumors of amazing features and so on. And those events usually affect the stock as well. So technically speaking, we are sitting here on 155, and this is the stick of both 100 and 500 moving averages. And let's see what happens. It's been very strong, relatively stronger than S&P or any other stocks in S&P. So also some traders are watching the dynamics of Apple when they trade indices, kind of an indication of what's happening during the trading session. So again, Monday the market will be closed, but Tuesday we're coming back. And most of the stocks didn't break, even though we had the sell-off and indices as well. We didn't break the Thursday's low. So as a major indication or a basic indication, we'll be watching when the market returns on Tuesday, especially for the US stocks. We'll be watching that checkpoint of a Thursday's low. If we break through it, and of course, if we close on Tuesday below it, there's a chance of continuation to the downside. So that's Apple. Now, AT&T is in a very, very interesting situation here. If you remember, I mentioned that since they got rid of all the media and just stuck to their major business, the telecom, there were a lot of good predictions for the stock, and they actually manifested, or we saw some nice moves to the upside since this change of the share structures. And recently we've been really selling. And I did some research on telecom. So T-Mobile is a leader now. It's doing more business than other providers as AT&T and Verizon. So that's why those guys are selling a little bit now. Technically speaking, if we look into it, they're really getting close to this level here, and that's on October 2008. It looks like it. The low was 1714, and we are at the same level. Again, it might happen, might not, but the levels are very serious things. and we actually might find some support over here, or if not, he could tank, anything could happen. But take a look, before the move higher, there was a huge spike down to 1714, and that's the month of, let's see, the month of October 2008, according to this chart. So we'll be watching AT&T, very, very important. Now, two other stocks I wanted to mention is Tesla and Twitter. So Tesla has been super weak since the split. Just to remind you, when the split happened on 25th of August, if I'm not mistaken, Tesla was priced at $304, and we're trading at roughly 270. So it's more than 10% drop. Now, it's a lot to do, of course, with the global situation and the global equity situation, and of course, it's being affected by the lawsuit of Twitter and so on. So we'll see what happens. It's crucial here. It looks like after the sell-off, not the sell, after the split, sorry, that normally, if the environment is positive, the traders and investors are jumping on the cheaper shares, but in this case, it didn't happen. So that's Tesla. Twitter, since the announcement of the lawsuit, Twitter recovered nicely. We came from $32, $33 all the way to 44, 45 almost, and then we've been sliding lower recently. And then some new developments. I'm not going to go into details. Some subpoenas, some new developments in the case. But let's see what happens. So far, we've been sitting here, and we hold this level here, 38.66, 38.60, 38.50, and we did break or spike below Thursday on Friday, but we held it. So let's see what this week brings. Maybe some new details of the lawsuit or anything else. So these two stocks, of course, are still in focus: Tesla and Twitter. And the last one is Pfizer. I mentioned to you last week that Pfizer being sued for issues with patent with Moderna, and stock reacted to it. As you could see, on Monday gap down, went lower, Thursday it rebounds, and Friday back down again. And we are holding this 40, what's the level here? 45.39 level, from which we had a nice run to the upside. So far, we're holding it. So if we are holding it, there's a chance things will get better for Pfizer. If we close below it, we might continue going lower. That would be a second attempt, because we did have a closure here on the 31st of August. So that's as far as equity market. So let's move to commodities, and we start with oil. As I mentioned to you, Monday, it's a special day for oil. We have OPEC meeting, and let's see what they say. Technically speaking, we've been really sitting on this level at 87, and trying to break through it a few times. We didn't manage to close below. So let's see what happens. Technically, it looks as a very strong support. It was here, and this is kind of a triple or quadruple attempt to break to the downside. We're not gonna guess, we'll just see what happens. Again, if we see the closure below 87, we might go lower and retest the lower levels here. Let's see what market does in general. But again, the equity markets in the US is closed on Monday, so it's going to be less volume, and I guess the full scale trading will happen on Tuesday. So that's when the real trading comes back. So that's crude oil. Natural gas, even though the pipe was shut down, the prices both in US and the European markets went down for natural gas, but we are holding here at 887. So you could see this was the initial stop on moving higher. We played around at these levels here. We sold after retesting the level, here again. We had the pullback, and we broke through it again, and now we kind of in a tight channel between 887 and 940. So let's see what's next in the deal with Russia and in general with natural gas. Now gold. Gold has been really having a hard time going higher. We went briefly again below 1700 on Thursday, and then we bounced back on Friday. But this level here around 1691 is kind of a support. So you could see we stopped here, and then with the fake breakdown, we moved higher. That was on July 21st. Then we can retest 1800. That's a $100 move, and then we came right back in pretty much the same period of time. So we are retesting now 1700. We bounced on Friday. Let's see what's next. And of course, as I always say, it's connected with in general with the US dollar strength or weakness, and the 10-year yields are also affecting the price of gold. The yields have been very strong. We've been staying about 3. Currently, it's about 320. We hit 330 on Friday, I think. So let's see what happens next in gold. And silver, I want to mention to you silver with the key number in $18. We broke below it, but we're not really running to sell off. So if we are above 18 again, there's a chance of continuation to the upside. But again, it will depend a lot on what's happening with US dollar and of course the inflation and the yields of 10 years and so on. So it looks super weak here, as you could see. The moment we broke through 18, we had all the closings below 18. We closed here 1784. We closed here 1782, and on Friday we closed a little bit shy of 18, which is very bearish. So now we really need to be closing about 18, even about 18 and a quarter maybe, in order to show some strength and potential move to the upside. Now we spoke about copper with China, of course, and it looks like with 340 we might hold. If not, the 330 is the next stop for support. And let's take a look at wheat. Wheat had a nice move. We said the 800 is the key number. We did move above it this week very nicely. In the beginning of the week, Monday was the move that we expected, and then we stayed above it. Then Thursday we closed below. Friday we bounced again above 800. So we're playing with this level. If we're keeping above 800 and fundamentals supported, we might continue to the upside. If not, we'll come back into the channel and into the same range between 750 and 800 on wheat. And let's finish commodities with cotton. If you remember, I mentioned that cotton could be a nice potential to the move up, and it did have a nice move. It hit the 200 moving average. They start sliding lower, and the past 2 days, the selling accelerated, and we are at 103. Now, what's here? It's very hard to say. It was a strong and quick sell-off, right? So according to the chart that we see, we might go and retest. Of course, 100 psychological level could be a nice retest. And if we pass that 98.50, the level that we held before moving higher, could be a potential entry for buyers. And if we don't get there and immediately come and close about 104.58, this level here, 104.50, and above the 50 moving average that we crossed now, we might go and retest the highs, also possible. So the key point that it's a nice volatility here, and for people that know what they're doing and have a nice plan and manage their risk correctly, this could be a potential move. So that's cotton. And we wrap it up with commodities, and we'll move to Forex world. Now we start as usually with dollar index, and if you remember, I mentioned to you that we might break the recent high here, and 109.12 was broken, and on Thursday we closed above it. We actually reached the high of 109.96, a little bit shy of 110, and then Friday we had the high 109.68, the low 108.89, nice range, and we closed 109.55. So dollar definitely strong. If you look at the weekly chart, it's a super strong uptrend, and of course it's all related with interest rate increase in the States, and it looks super strong. We broke through pretty much most of the resistance on the way. Potentially we could go anywhere, I don't know, 111, 115, 116, the next levels of resistance. So now what's strong, what's weak? And I mentioned to you last week, the euro has been strong on the strong dollar. Euro didn't really sell below the recent lows, and a lot of it to do with the upcoming this week, the interest rate decision, and a lot of analysts predict, like I said earlier, 0.75 increase, and it could be already priced in. Definitely, again, I don't like to say definitely in this case because nothing's definitely in the market, but if for any reason they cut less, that could be disappointing for euro, and maybe it will break through. But if they do 0.75, the question is this totally priced in or not? So the key level here, it's been holding here 99.25, around that level, 0.9925, and we'll be watching. But it is, if you compare with other currencies against US dollar, euro is holding the strongest pretty much. The weakest, I went through things, pound is the weakest. It has no pullbacks, it's just sliding, it's in a free fall. And if you look at the big picture, the next stop that might have some hope is the low of 114.09, and there was at the time of the pandemic drop, that was in March. The March low was 114.09. We are at 115.07, another 100 pips for potential hope for the support, or we might bounce for surprise. Could be anything, but if you take relative strength, the pound is the weakest and the euro is the strongest among the major currencies. We mentioned already Australian dollar. It's been weak with the China and in general. We have New Zealand dollar as well, been weak and retesting the lows of July. So far it's been holding it, so we'll be watching it. And yen has been super weak. And this week it finally broke through the recent highs of July 14th, and we established this. It's not proven yet, it's not retested yet, but it looks like the previous resistance might become a current support, and that's around 139.33. We reached on Friday as high as 140.79, and we might come and retest this 139.33, and if we are holding it, we could be potentially going higher. And the opposite scenario, if we start closing below it, that means that this was not so convincing for buyers, and we might start sliding to the downside. So dollar yen is in a very serious spot here, and it's going to be interesting to watch and see what's going to be next in this pair. USD Swiss, also very good spot here, potentially a strong resistance. If you could see over here, this level, this candle here, that was July 11th, the high was 0.9842. We had few fake breakouts, and then we had a nice sell-off, and we tried to retest this with the fake breakouts again. So as you could see, the reason we're going lower, that the sellers are coming this level hoping that this is the top and trying to catch the move down. So potentially this scenario works with the short as the dollar continues to be strong. And if we do close above it, we might continue to the upside. But for now, all the attempts are failing. So as I said, dollars continue being strong. So logically, we might continue higher, but there's some powerful force is not letting it go. So again, after the long disappointment, what happened over here, the sellers are coming in. So it could be the same scenario here, similar scenario to this one. So again, together with USD JPY, the USD Swiss is in a very good spot over here of a potential move either way. Okay. One more thing I wanted to bring, that Australian JPY. Let's see if I can find it. Aussie JPY. Also very interesting level there. I'm trying to bring now besides the regular pair, something that I see potential levels there, and that's why I'm bringing this one to you together with this USD Swiss that I just spoke about. Take a look. Daily chart, the huge candle here on April 19th, that the high was 95.65, right? We had fake breakout on the very next day. We came right below this level. We had to the penny hit again and hit again, and we're fighting with this level again. So as you could see, it looks like the sellers are gaining control over here. There were a few attempts to go higher, but they couldn't. So again, potentially we could see the repetition of this move over here or this move over here with the potential move to the downside. If not, we need to see closing over here. You see this closing here was a nice signal, but we didn't have the confirmation. We didn't have any actions above this level again. Immediately, the moment we closed higher, this spike was a fake spike to the upside, and we closed lower on the sell-off. And we've been sitting, opening and closing below that level, which is bearish. So Aussie, yen, very interesting, possible scenario to the downside. At least you know the stop, and that's the main thing that I always say to a trader. You need to know your risk. So potentially, if somebody decides to short at 95.65 and looking for a stop, so potential, let's say here the stop would be the high of Friday 96.03. That's about 40 pips. Stop a potential move of anything, 100, 200 pips, or whatever it is. So these are the scenarios that are worth watching. Okay, so that's the last part I wanted to bring up, or maybe not. Let's bring ZAR. USD ZAR. Okay, it was I tried to understand dynamics of this pair. It's very interesting. It's kind of it's like a slow engine. It's going to go fast, but it really takes time to develop, to move, because the dollar is getting stronger, and USD ZAR eventually meets that criteria, but it takes time. But in any event, we did move eventually on the strong dollar, and we are at the key levels of resistance here. This is the spike that we had back on July 14th, and the high was here 17.299, so 17.3. And if we were to go higher here, we would need to have a nice price action above this level, first closing above it and then confirming about those levels, and possibly continuation to the upside. If you zoom out on the weekly chart, it looks very nicely here. We had a nice profit taking, and then on the large bar we came back and we straight back to the level of resistance again. So roughly 17.3 is the level that we might be breaking to the upside. and continuing high. If you look at the monthly chart, it could, if it breaks this level, it could go to these levels here. That was 2020, the pandemic time, when we reached 19.32. Okay, it could happen, or we could stop at this high, 1784. But it looks very nice, a potential move to the upside. Okay, so that's as far as the Forex. And let's take a look, before we finish this webinar, we'll take a look quickly at the Bitcoin. Too many lines. So Bitcoin is struggling with 20,000, and there are a lot of things. I think Kramer also said, I'm afraid to quote others, but a lot of analysts are saying that it's time to get out of crypto. And some are saying, someone from JP Morgan said that, with the Fed tightening and the market selling, the crypto is not the best place. So the investors should sell it. That's what they say. And of course, there's a lot of people that's still holding it and hoping to retest the highs. And so basically we are below 20,000, and let's see what happens then. And Ethereum is fighting with his level here, or its level at between 1,500 and 1,600. So these are the cryptos. Okay, so just to put it all together in one sentence, the market's experiencing a tremendous gravity effect. So it's a lot of pressure in the markets, and with the Fed, as we mentioned, double tightening. We had a shortage of natural gas. We have a lot of negative things, unfortunately, including the war that affects global economies. We had inflation that's probably the biggest war out there that the Feds and other central banks globally trying to fight. And this week we might see continuation to the downside. And Monday the U.S. market's closed, so it's not going to be the same trading. U.S., as you know, it's the biggest volume of trading, the biggest turnaround. And we have an interest rate decision this week. Check economic calendar, put yourself reminders if you need to, and stay positive. Have a plan, manage your risk, enjoy the weekend, and have a successful week. We'll be another thing. Sorry, I almost said we'll be back next week. I'm taking a vacation, so there's a 95% chance that next week we will not have a webinar. By some miracle, I might do it. I'm not sure. I'm traveling. I'm going to see my family in the States, and most likely I will not be able to do the webinar, so I apologize for that. And we'll be back the following week, and I want to wish everyone all the best. Stay safe, stay healthy, stay happy. All the best. Take care.